Hey everybody, today's video we're going to evaluate the three major indexes using technical analysis. These are the Dow, NASDAQ, and the S&P 500. We're going to analyze them by using the ETFs that track these major indexes, which allows us to see volume and also buy and sell them just like any ETF. Just remember, this is not financial advice and we are not financial advisors. Please do your own research before you trade. If you want to learn more about technical analysis, check out our link in the description below. Okay, Paul. So what are we starting out with?
So we're going to start out looking at the Dow. It's called the Spider, SPDR. That's the ETF that tracks. So you can see I've drawn out two support lines. One is a real support line, this upper one. And then I have another lower line here that I'm just drawing out as speculation. Like it's another level of support. So what I'm looking at is a support where I'm going to keep seeing a bounce. This is actually could potentially be a buy point if the next few days confirm that it's going to bounce up like this. I usually wait a day or two before I look at that as a confirmation. I also look at volume.
For a day or two of confirmation, we might be losing out on a few percentages of gains, but at least we know that it's actually going up and, it wouldn't be a loss.
That's right. So potentially it could, if it stays within a channel that looks like it's appearing to make, that's almost a 5% gain. That's a lot for an index in a short period of time. So that would be what we'd be looking at, probably a channel, something in this range here is a realistic range. And that's about a 5% gain if it goes up there. Yeah. On the other hand, if on Monday it starts to go down this way, the next area of support is this long line that I've drawn out. That it's arguable because you could also say that that's the support, but really the next real support is way down here. When we go back, we can see why we definitely have some bouncing going on before it took this big run up. So it's possible this is all just part of this lower support. There's just no way to know until we see it happening. But I can tell you one thing, if it starts going below this first support, this most recent support, then I am definitely not going to be putting any money into it until I see it, a trend firmly established. And right now we have the beginnings of a trend, but it's not really firmly established. Plus we have high volume on the last 3 days, two of which were down, pretty big down days. So it's not looking good. I wouldn't be surprised at all if we start having a major correction, which is considered 10% is a correction. Over 10%, we're looking at bear market territory. And I wouldn't be surprised if it crosses this lower line, we start heading towards this bottom support line. So
we've got an amazing run so far anyways. So
yeah, we've had some huge runs from pretty far back here. Hard to say what's going to happen. Obviously, we're due for some kind of a correction. Technical analysis is basically saying we're in a fork in the road. We don't know what's going to happen. It might bounce up right here. It might just start bouncing back up. There's a lot of stimulus money going into the market, so I wouldn't be surprised if it bounces up. I wouldn't be surprised if it goes through. But as a technical trader, I should even say Eric and I are conservative technical traders. We're going to wait for confirmation one way or the other before we start putting money in. And then when we do put money in, we're going to use a stop loss probably of about 5%. That's that generally seems to be a good range. So let's take a look at NASDAQ. NASDAQ is traded as QQQ. That's the ETF that tracks the NASDAQ index. Look at NASDAQ. It's had an incredible run for a long time now.
All these tech stocks just skyrocketing,
Skyrocketing. And we have a very strong channel action going here. This lower support, very textbook. Unfortunately, on Friday, we had a pretty substantial breach. So once again, what the technical analysis is telling me, we were bouncing up and down. It was kind of meandering a bit, but it was basically bouncing. Any of these bounces would have potentially been a buy point. Like I would have considered buying here and it still would have bounced down, but when it bounced down, it's still higher than where we would have bought, and potentially it would have gone up 8%. That's a lot for an index. That's a lot. Stocks usually do that, but indexes don't oftentimes do that. So it's going up like gangbusters. Probably means it's also pretty volatile, but the technical analysis aspect is telling us that right now the trend has been broken, and it was broken on high volume, much higher than average. Yes, there's been some very high volume price action in the past, but we're just looking recent price action. This is higher than average. Most of it is average in this range here. This is double or even more than double average. So that's a pretty strong sign that we've breached this channel. Could it keep going up? Yeah, sure could. What's the next line of support? I don't see one. NASDAQ has a long way to fall if it's going to fall.
And breaches are not uncommon really, but as you say, like with that amount of volume, it is something that we really look at it and say, hey, this is an indicator of something to come.
You can see here, this is a very long trend that started in March, and there was a breach in the trend, and this is a very substantial breach. That's a breach to keep you up at night right there. But then it resumed, and it continued for a long time. If you think about it, from this point here to our most recent peak, that's an 18% increase in just a few months. That's just a lot. That's a huge increase. So NASDAQ has been very resilient, and for a long time now, it's been very resilient. So what does technical analysis tell us about NASDAQ? I wouldn't put any money into it yet. I would wait for additional confirmation of it being in a downtrend if you want to short it. I'm not a fan of shorting. Shorting's a dangerous game. I definitely don't see, it's possible that it's going to create a new trend here, but I'm just guessing until I see a real trend with several touches. There's no trend here except a breach, and that's scary. All right, so let's take a look at the S&P 500, and the ETF that tracks this one is SPY. What's going on here? Ooh, I put a note in there. Not good. Market could be heading for major correction. Why do I say that? The S&P 500 almost always has more clear technical indicators than the other two, and one reason is that the S&P 500 has a lot more stocks that it's tracking. NASDAQ is only 100, the Dow is only 30. S&P 500 is oftentimes considered the true benchmark of the American stock market. And you can see it's got very solid touches, and then boom, right here, a major breach. And it does appear that there is a very clear line of support.
No.
Lines of support are always subjective. Everybody's going to have their own idea what that is. Some people might say, well, this is really the line of support down here. I think it would resume a trend. To me, that's if it goes past this line here, we're in big trouble, really big trouble. If it doesn't bounce off this support line, it's a free fall.
On all three of these, they've actually gone above the previous high before coronavirus, right? Right before coronavirus hit and all the stock markets crashed, we were at highs, all-time highs. And so a lot of people, I think, are looking and trying to compare and see, okay, are we just resuming where we were before? Is there potentially any trends that can be drawn from back in, what was that, 2020?
That's a really good question. You can easily make it, look at that. That's, in some ways, that's a textbook ascending triangle.
Yeah.
And it did go up, but it also came down. I abandoned that approach. And this opens up an interesting issue with technical analysis. Oftentimes in technical analysis, more than one pattern can be demonstrated in the charts. So which pattern do you go with? That's a very, very good question. I oftentimes tend to err on the side of a longer pattern rather than a shorter pattern. Yeah. On the other hand, if a shorter pattern has very solid touches and it's almost undeniable, if it has better and more evenly spaced solid touches than, say, a much longer trend, I'm more likely to go with the shorter term trend, and
And
vice
many-
versa.
And many times too, though, you can have smaller or shorter trends within a much larger trend.
That's right. And also you have to think about traders, many traders and including institutions are using technical analysis. And technical analysis works simply because people think it works. But the truth is it actually does work. It's not 100%, but if you get up into the 80% range of it working, that's pretty substantial.
I mean, it looks like in summary here, we don't want to buy. We're looking for confirmation. Is it going to go down? Going to go up? Is this a real breach that indicates a new channel is going to be forming? Or is this just a small little breach, which doesn't look like a given volume, but it could just be a temporary breach and it will continue in the same channel, right?
That's right. So stay tuned and we'll find out on our next week's analysis.
Yeah.